Welcome to the Circular Bioeconomy Systems Institute Member Hour series. I am Alicia Bodenbach, and I am joined today by my co-host, Anurag Mandalika. The Circular Bioeconomy Systems Institute, or CBSI, is dedicated to transforming our traditional take, make, use, dispose linear economy into a sustainable circular bioeconomy. Um, our goal is to promote systems that regenerate natural resources, reduce waste, and minimize environmental impact. Before we begin today, we have a few updates and some ground rules to share here. Uh, please join us, or please follow us on please follow the Circular Bioeconomy Systems Institute group on LinkedIn to stay updated on our latest activities. I'll drop the link to that group into the chat in just a minute here. We would love to see you join in on the conversation there as well. And to ensure a smooth session, please keep the following ground rules in mind. Please keep your audio muted during the presentation. Feel free to add any questions into the chat at any time. We'll also have a dedicated Q&A segment later for verbal questions and discussion. And this webinar is being recorded and will be available for later viewing on the ASABE and CBSI websites. So now I'll turn it over to my co-host, Anurag, to introduce today's featured speaker.
Thank you, Alicia. Good morning, good afternoon, everybody. My name's Anurag. I'm an assistant research professor at the Center for Energy Studies at Louisiana State University. And it is my honor today to introduce our webinar speaker, Dr. Stephen Devadoss. Dr. Stephen Devadoss is currently the Emabeth Thompson Endowed Professor in the Department of Agricultural and Applied Economics at Texas Tech University. He's a recipient of the Lifetime Achievement Award from the Southern Agricultural Economics Association and a fellow of the Western Agricultural Economics Association. He has published more than 180 articles in reputable journals and has received 22 research awards. He also has helped his students publish more than 100 journal articles and received 80 awards, including 20 thesis and dissertation awards from all of the economics associations that I just mentioned and Texas Tech University. So we've got an amazing mentor and someone who's been working on this area for a long time. So it's my pleasure to turn it over to Dr. Devadoss. Please take it away, sir.
Thank you very much, Anurag. Okay. Hello, as Anurag indicated, my name is Stephen Devadoss. Okay. If you are in the East Coast, good afternoon. Other times, good morning. Okay. I planned for about 30 to 35 minutes talk. Okay. Feel free to put your questions in the chat during the presentations. But if you have longer questions, you can wait during the Q&A sessions. Okay. So to begin, I'm going to present today the implications of U.S. trade policies, particularly for the last 1 year or so. Okay. Implications for U.S. agriculture, very particularly, but also for the U.S. economy in general. Okay. Can you all see the slides? Okay. All right. Okay. So my outline for the talk is, to begin with, I will give a brief timelines of the tariff. You know, it changes day by day. Okay. But I'll do my best to recap what's going on. Okay. Then talk about some of the trade agreements that the United States has come up with the last year or so. Okay. And then talk more in detail about all the uncertainty and unpredictability these trade policies have caused, particularly for U.S. farmers. Okay. Then look at the economic impacts more generally for the economy and also specifically for the agricultural sectors. Okay. Then briefly go over some of the inefficiencies these policies are causing. This bit more technical, but I will present it in a layman view. Okay. And also cover the implications of these trade policies for the U.S. trade deficits. Okay. And then conclude the talk with some of the policy implications, what it means for U.S. agricultural industry. Okay. So tariff timelines. Okay. I don't know whether you remember or not. Okay. Last year, about a year ago, in April 2025, the U.S. government announced Liberation Day tariffs. Okay. This very massive tariffs, basically a 10% tariff on imports from every countries. Okay. But some countries faced even much larger tariffs, 11% to 50% for about 57 countries. In particular for China and the US, when they were retaliating, it went above 100%, 120% range. Okay. But after a month or so, they got together, they brought the tariff down quite a bit. Okay. These policies basically go against the WTO negotiations. Okay. If any of you remember, okay, there used to be an organization called GATT, okay, General Agreement on Tariff and Trade, that was established in mid 1940s after the World War II. Okay. Then WTO, the World Trade Organization, is the continuation of GATT that was formed in 1995. Okay. So for the last more than 60, 70 years, countries have been getting together, trying to bring down these trade barriers, okay, little by little through various round of negotiations. Okay. But the current administration basically went against all these 70 years of negotiation and started putting these high level of tariffs on many countries. Okay. Since April 2025, there have been many changes, frequent pauses, back and forth policies. It's very, very difficult to keep track of all the changes, even for economists. Okay? So if you're an ag engineer or any other field, I don't blame you getting confused about all these policies. Okay? Even for my research, I need to go to various sources, okay, to find out what exactly going on a daily basis. What are the new tariffs? What are the new passes, rollbacks, all those things. Okay. One good source for this kind of information is by Bowen. This in a website. They keep track of all the new tariffs, all the changes. Okay. So if anybody interested in, you can go to this website. I do have to tell you, it's not easy read. Okay. It's a very in-depth, complicated policies. Okay. Okay. So since the Liberation Day tariff in April, okay, the US government has tried to complete several trade agreements, okay, with many countries. Okay. Usually trade agreements between two countries or a pair of countries take several years to complete. Okay. It could take somewhere from 2 to 10 years, okay, to negotiate, to iron out all the differences. Okay. It takes quite a bit of time, but the US government tried to reach trade agreement with several countries in a short time. Okay. They wanted to have agreements like in months, 3 to 4 months. Okay. So the US government last summer, last fall, had some agreements with many large countries, the European Union, Japan, South Korea, United Kingdom. India, they had agreement about 2 months ago. Okay. But since the Supreme Court ruling came, they both passed. Particularly India said they wanted to wait, to renegotiate. So India deal is not done yet. Okay. In addition to these large countries, the US government had trade agreement with many smaller countries, Asian countries like Indonesia, Taiwan, Bangladesh, Cambodia, Malaysia, the Philippines, Pakistan, Thailand, and Vietnam. Okay. And also it had agreements with some Latin American countries, okay, Argentina, Guatemala, El Salvador, and Ecuador. Okay. But still, there are trade agreements that need to be reached with several major countries, including our neighbors, Canada, Mexico. Obviously, China and Brazil, they are two large countries. Okay. the negotiation is still going on. In fact, Chinese delegates and US delegates met last Sunday and yesterday in Paris. Okay? They have not finalized any deals yet. Okay? In addition, Russia, Australia, Turkey, Saudi Arabia, UAE, and South Africa, these are the countries that there are no trade agreements yet. Okay? So moving on to continuing the trade agreements. Okay? Some of these trade agreements violate several key principles of WTO. Okay? In particular, there are three principles I would like to highlight. Okay? The first one is the reciprocity principle. What that means is if one country is trying to negotiate with you, trying to reduce your barriers, you need to go to the table willing to reduce your trade barriers. Okay, there's a mutual understanding between the countries, but that has not happened with current trade negotiations, largely because US, with its large economic size, it feels like it has an upper hand. Okay, and instead of mutual negotiation largely imposing on some of these countries to the trade agreements that US wants. Okay? And many countries did go with that one because of the export dependence on US economy. So many countries want to export to US, so they are willing to make some deals with the United States. Okay? The second principle that was not adhered is non-discrimination or most favored nation principle. Okay? This means, say, US as a country, if it has, say, 10% tariff on some commodities, say, from Europe, okay, it has maintained the 10% tariff on all other countries for the same commodities. Okay? Suppose if US importing, say, steel from Europe for, say, 10% tariff, it has to maintain 10% tariff on every other countries. Okay? That's what the most favored nation principle means. Okay? But that that did not happen. Okay? Meaning that the tariffs vary from country to country. Okay? That's also a violation of WTO principle. Okay? The final, probably more critical principle is the dispute settlement process. Okay? In the WTO, there is a dispute settlement body that oversees any trade disputes or disagreements between countries. Okay? And this body usually studies all the issues related to the disputes and then tries to rule on this without taking any biased opinion. Okay? But since the US policies in 2017-18 and also current policies can pretty much circumvented this dispute settlement process, and the whole functioning of this dispute settlement process is in limbo, meaning that nothing has been resolved through WTO dispute settlement body. Okay. So moving on to next topic.
Sorry, can I interrupt you quick?
Okay, go ahead.
With the dispute resolution in particular, is there a name of the policy, like a specific policy that we've adopted, or what's going on more recently in the last 10 years, I guess, or 5 years?
Since the first administration of Trump, this process is not pretty much paralyzed. Okay? Nothing he has been going through. Okay? But before that, it's usually there are many litigations between countries, and this body resolved most of them. Okay? It's also fairly time-consuming process, just like a regular court litigation. Okay? It takes somewhere from 2 to 3 years. And now the US cotton dispute with Brazil that went on for a couple of decades, okay, before it was resolved. But current now, there's not much going on with this dispute settlement body. Okay, is that clear? Okay.
Yeah, thank you.
Okay. 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 So many countries view the US as an unreliable trade partner because of these frequent changes in policies. Okay. Again, if you're dealing with a particular business, you want a fairly stable relationship. Okay. If there's constant changes going on, it becomes very difficult for any one partner to have a continuous working relationship. Okay, the same thing with the trade area also. Okay, you want to have for exporters, importers. You don't want to have any uncertainties and unpredictabilities. Okay, because that can make it very hard to do business. Okay, so this uncertainties impact really farmers. Okay, any businesses, particularly farmers, can businesses they need to make investment decision. Like farmers, whether they want to buy new machinery or buy new land. Okay, and if they do not know what crop they are going to plant, okay, because of the state policies, that becomes very difficult. Okay, particularly the production decisions. Okay, so China's putting tariff on soybean or some other crop. As a farmer, you want to uh, be thinking about once I harvest the crops, where do I sell it? If I grow soybeans, okay, what if China is not buying soybeans from us? Okay, we are going to get low prices. Okay, and this constant changes in tariffs and retaliations by other countries can makes it very difficult for farmers to decide whether I should grow corn or soybean or some other crop, right? Okay. Those kind of things are very difficult. Okay. And also, if you are not sure what crops you are going to grow, then you are going to be hesitant to what kind of inputs you want to buy. Okay, what kind of how much fertilizer you want to buy, how much labor you want to hire. Okay, all those things could be a problem if you do not know what exactly you are going to do in the next month to 6 months. Okay, and also marketing distance. Okay, where you are going to sell your product. Are you going to sell in the US? If you are selling the US, because not many countries are importing US commodities because of the tariff retaliations, the US price are going to be depressed for agricultural commodities. In a case like that, you are deciding whether you want to sell within the country or export to some other countries. If you want to export, where do you want to export? Okay, so those kind of uncertainties are serious issues when tariff policies are constantly changing. Okay, in addition to sales and exporting, sometimes as a business you want to import commodities. Okay, you constantly hear news my coffee beans imports are very high, expenses are very high because of the tariff, the price are going up. Okay, and similarly, imports of wine or any other commodities from overseas are high. Okay, so we were constantly debating. Okay, my costs are going up. Where can I buy imports cheaply? Okay, and how can I keep my business running when I have to pay more for imports? Okay, so all those business decisions, not only for farmers but general economy, are a serious issue when policies are constantly changing. Okay. Any questions? I will be happy to take before I go further. Okay. Okay.
I've got one, sorry. That's a little late on the trigger there. Are
Good.
we
Yeah.
seeing some of these impacts creep through the agricultural supply chain? Like, has there been maybe a reduced demand for? Hopefully, you're not covering this ahead. I don't want to jump the gun, but
I will talk about briefly. It does impact the agriculture sector. Okay. Again, when production is uncertain, farmers are going to be uncertain whether I want to buy a tractor this year or wait next year. Okay. So if they want to make decisions like that, it's going to seep through the downstream area. Okay. What kind of input I buy, okay, how much fertilizer I buy. Okay. If they're delaying any of those purchases, that does affect the input sectors. Okay. And also how much money I have to borrow. So that has implication for banking also. Okay. So moving on. Okay. Some countries have retaliated as soon as US started tariff last year. Okay. China is probably one of the biggest market for US exports of agricultural commodities, particularly for soybeans. China buys a lot of soybeans from the US. Okay. So with the tariff retaliation by China, it's somewhat difficult to export to crops like soybeans to China, even though both countries agreed about a few months ago that China is going to buy 25 million of tons soybeans every year, in the next 3 years. So some agreements are going on. Still, it's not same as free flow of commodities without trade barriers. You need to constantly negotiate, constantly keep both parties in line with the agreement, because one party can deviate, the other party is going to pull back their agreement. So those kind of changes can continue to happen. Mexico also did not want to buy corn and dairy, pork because of the tariff problems. Let's look at some of the economic impacts. So as soon as Trump administration came up with this massive tariffs last April, many economists predicted that it's going to be like a 1930s type of depression during the Smoot-Hawley tariff era. That not only the US and the global economy is going to go into recession. But that has not happened. That's somewhat of a positive news. That the whole world did not fall apart. Still, countries are continue to grow their economy. It may not be at a high level, but no serious recession has not happened. However, because of the tariff, the prices in the US are very high. Very high. We'll talk about that in more detail in few slides below. But those high prices does affect the consumers in the United States. In fact, because of the high prices, whenever there's high inflation, the Fed tried to cut interest rate to boost the economy. But if the prices are very high, then boosting the economy is going to only increase the high price. So the Federal Reserve has delayed interest rate cuts because of high prices arising from the tariff. So Fed took some time to cut the interest rate because tariffs are increasing the high prices. We did several studies related to the policies. I do not have time to go over all of them, but I would like to present one particular study. And also I have slide at the very bottom that lists many of my studies that I have done the last 6 months or so. This study, basically, we did that last fall, October, November time. We looked at the tariff that US imposed on many of these countries. That's what I'm listing here. And what's the effect of these tariffs on trade between these exporting countries and the United States? In particular, high tariffs on Brazil, 50%, India, 50%. Again, for China, it's 30%. Before it used to be 120% or so, but they met and agreed to have a lower tariff. When you have this kind of 30-50% tariff, and our neighboring countries, 25% tariff on Canada and Mexico, these are all fairly large tariffs that's going to impact trade. In this particular study, we looked at these tariffs on aggregate trade, not on a specific commodity. We do have some studies on specific commodities like specific agricultural commodities like vegetables. But this one is a fairly aggregate study because we want to give an overview of the major impacts of these policies. In terms of results, these are the countries that we looked at, where the US is importing from. These are the baseline values in terms of million that US was importing from these countries. For example, from Brazil, 3 billion, Mexico, 3 billion, Canada, 8 billion. This is just agricultural imports. And what our study found was the how much the imports went down from these countries, and this is in terms of percentage change. Okay, so if you look at these impacts, okay, for Brazil, because of the tariff alone, 50% tariff, U.S. imports from Brazil, the agricultural imports went down by about $1 billion. That's about 36% from Brazil. Our neighboring countries, Mexico and Canada, import went down by 18% from Mexico and about 4% from Canada. China is another major countries where we import from. There the imports went down by 22%. India also faced a very high tariff of 50%, and imports from Mexico went down by 37%. So this kind of large level of imports come down. That means we are importing less from these countries, these agricultural commodities like vegetables or any meat items. When we import less, the total supply in the US is going to go down. When the supply goes down, naturally the price is going to go up, particularly when there's a high demand for those commodities. That high prices can add up to already high inflation that consumers have been facing last 4 or 5 years since the pandemic. That's why consumers are not happy about these high tariff policies. Any question on these 2 slides about the economic impacts before I move down further?
Yeah, Stephen, you got one in the chat here. So you were talking about the early prediction of global recession and the slowdown and everything. The question in the chat says economists are talking about stagflation. There is slowing down of economic growth in the US. Not sure if this is because of tariffs. I would guess that because that business uncertainty created by tariffs are a major factor in this. Your thoughts?
Yes, yeah. In fact, that uncertainty does play a role for the businesses to slow down their decisions, investment and production decisions. But having said that, economy did not go down a deep recession. The economy is growing slowly, maybe 2 to 3% range, but it did not go into very serious recession. But when the tariffs were announced last April 2025, there were a lot of gloom and doom scenarios. That has not happened. That's what I'm trying to emphasize. That doesn't mean everything is glorious. The tariffs do impact the economic activities.
And just as a follow-up, can you clarify for our audience what stagflation is or how?
Oh, yeah, that's a good point. This term happened in 1970s. What stag means stagnation. The economy is not growing well. That's why stagnation. At the same time, whenever the economy is not growing well, usually the prices are low because consumers do not have enough money to buy. But stagflation is not only economy is stagnating, but inflation is also very high. That's a double whammy. Usually that do not happen unless in a very bad situation. This happened in 70s because of the oil price so high that caused a lot of economic recession and higher prices. And that kind of phenomena being experienced a little bit currently because economy is not growing that much, but meanwhile the inflation is so high. Some of these are caused by tariff without any doubt.
Thank you. There's a quick follow-up again, another great question in the chat. They're asking, are these differences in trade flow to any particular product types? Like, is it equipment or is it fertilizers or inputs?
These are generally agricultural commodities, not the inputs. We did not look at specific inputs. We have looked at specific commodities like soybean, vegetables, corn, like that. But we did not study the input sectors, tractors, or fertilizers kind of issues. But that's worth looking at. Since Russia-Ukraine war, the fertilizer price has gone up quite a bit. So in addition to that, with these tariffs and current war in Iran, the oil supply being curtailed, they all have implications for input sectors, particularly fertilizer chemical price can go up for farmers.
Makes sense. Thank you. And yeah,
Okay.
audience, please keep the great questions coming.
Okay, good. All right. Okay. Can we move on? Okay. Okay. So continuing the economic impact, okay. Even though there's no big recession due to tariff, the world trade did decline. Okay, did go down. Okay. U.S. imports of commodities went down by 11%. Yes, total imports, and tariffs also can lower the agri-food imports. Okay, like I said in the previous slide, about 1 billion from Brazil, $500 million from Mexico, about 0.35 billion from Canada. Okay, in addition to that, okay, some of the importing countries, okay, like China, okay, they think that US is not a reliable trade partner, so I'm going to buy less from US and buy from other countries where the export source is reliable. Okay, a good example is this happened in 2017, 2018, and also now. Okay, China buying soybean from Brazil, okay, and cotton from Brazil than from the US because of this constant bickering or disagreements in trade. Okay, countries like China thinking that US is not a reliable trade partner, I better go to some other countries. Okay, so consequently, okay, countries have diverted their imports from other countries. Okay, that means US cannot export to China and some other reliable importing countries. Okay, that's why US export to China went down by 0.6 billion, and also to Canada and Mexico, US exports have declined. Okay, not only we are importing less from those countries, but also we are exporting less to those countries because of these tariff policies. Okay. China is a large importer of soybeans and cotton, just I mentioned a minute ago. Okay. And constant battle with China in trade is not a good news for farmers. Okay. It creates a lot of headache, lot of uncertainties. Okay. It pretty much, you hear that news every time you turn the TV on or radio on. Okay. You hear news that farmers are struggling because of these policies. Okay. Okay. And sometimes foreign countries, they permanently switch their imports from instead of the United States, they switch to other countries. Okay. When they do that, okay, the US farmers are going to lose a market in a major countries like China or India and Europe. Okay. If that kind of change takes place permanently, even for 3 to 5 years, okay, that's going to affect our US exporters, our US farmers quite a bit. Okay, so this kind of policies are not okay, conducive for farmers, okay, to continue to produce what they want to do and continue to export to reliable trade partners. Okay. And also the economy has not gone recession, but some economists do predict that it could take another year or two to see some of these adverse effects of these policies to shift through the economy. Okay. So we are continuing studying and also keep tracking of all the other studies, see how the economy, particularly the farm sector, performs next year or two. Okay, particularly if this policy persists for longer, okay, that could be a serious problem. Okay, okay. Let's move on to economic inefficiencies. Again, this is a little bit technical, but let me put it in simpler terms. Okay, so the U.S. government claimed that U.S. is not paying, U.S. importers or consumers are not paying tariff. It's the exporting country paying tariffs. Okay, that's simply not true. Okay, whenever there's a tariff, both the importing countries and exporting countries pay for tariff. Okay, how the importing countries pay for tariff? Because of the tariff, imports are going to be expensive. That expensive imports comes from tariff, and that ultimately translates into high price to the importers, and that high price is eventually translated to consumers. Okay, so US importers and US consumers do pay for this high tariff in terms of high prices. Okay, so that does affect the U.S. Citizens, okay, businesses and consumers. How do exporters pay for tariff? Okay, when you are putting tariff, okay, exporters are going to get lower price for their commodity to export to the US, okay, and also they're going to export less to the US. So consequently, exporters also affected. They also pay some of the tariff. Okay, so it's both importers and exporters pay for the tariff, not just the exporters. Okay, and the last few months, the US administration has been saying that only the exporters are paying. That's not true. In fact, all the tariffs are collected. They are collected from the US importers, not from US exporters. Okay. So what are the economic consequences of these tariffs? Okay. There is a positive aspect in the sense that US can collect tariff revenues. Again, it's collecting tariff revenues from the US citizens, US importers. Okay. And because of this tariff, okay, the prices are higher. That incentivizes US producers to produce more. Okay, so the silver lining is, okay, US producers benefit. Then there's some tariff revenues, albeit collected from the US importers. Okay, but the big negative aspect is, okay, whoever buying those commodities, like US consumers, they are the one paying the high price, and it's a huge loss for US consumers. Okay, if we add up these consumer losses and the tariff revenues US producers benefit, it's usually negative, meaning that consumers' losses always exceed tariff revenue and gains to US producers. Okay, in general, that's true. Okay, the losses are always more than the tariff revenues and benefits to US producers. Okay, so that's where these inefficiencies come. Okay, that losses by consumers exceeding these gains. Okay, that leads to economic inefficiency. This is a great topic that we study quite a bit in trade classes in agricultural economics. Okay.
Stephen, if I can quickly
go ahead.
interrupt,
Yes.
we've got some great questions and comments in the chat. We have a question that's saying, besides soybeans, which other commodity crops have been most affected? Is it wheat, sorghum, cotton? I've got a few responses to canola and rice. Have you
Yes.
looked into anything besides soybeans? And yeah, what is the impact?
Yes, we have looked at many row crops. Again, I will show you some of the studies at the bottom that I have listed in the last slide. If you are interested, you can go to those papers, look at some other numbers. We did look at many row crops: soybean, corn, wheat, cotton. Okay, many of the row crops. Okay, soybean is probably the biggest commodity that's affected. Okay, because of the large export to China. But most other commodities are also affected, but not to the extent of soybeans. Okay, cotton is a very serious problem. Okay, in fact, U.S. government negotiated some agreement with countries like Bangladesh, which buys quite a bit of cotton from U.S. Okay, to offset some of the losses from China. Okay, so many commodities are affected, but the biggest one is the soybean. And the meat sector, beef and pork, poultry, they're also affected because of these trade policies. Okay. Any other questions?
I have one. That's my personal question. When you're talking about the share that consumers are paying, I know some companies have passed them on to consumers, some of them have not. Do economists have a sense of what that number might be? Like, what am I paying when I go to the grocery store for tariffs versus, the grocery store?
Yeah, that's a really good question because I'll give you the answer in a minute. Okay. So it's the Supreme Court rule that the US government has to pay all the tariff they collected, revenues collected, whom to pay, to the businesses where they collected the money or from consumers. Okay? Do we need to pay the consumers? Because eventually the high price war borne by consumers. Okay, so that's another battle. Okay, right now it's not clear whether the business are going to get any tariff revenues. If so, some legislators are saying that they should be passed on to their employers. Okay, and also some should be passed on to US consumers in terms of some refunds, okay, tax refunds. Okay, those are all being discussed. Okay, so far nothing has been done. It's, in fact, some companies like FedEx or UPS, they were taking US to the court to get some of the Costco. Yeah, they're asking for refunds. Okay, but in terms of number, specific to your question, okay, the number varies quite a bit. We have not done any study looking at how much are passed on to consumers, how much are passed on for kick up by business in terms of absorbing the losses. Okay, that varies by commodity. Okay, so it's important to look at those commodity individually rather than aggregates. Okay, does that make sense? All right. Okay. Yeah, again, so foreign countries exporting to the US, they also lose because of this tariff. They get to lower prices, they export less. Okay. All right. Some foreign countries, they try to divert their exports to other countries instead of exporting to the US because they think that US is not a reliable trade partner, and moreover, if we are going to reduce the US exports, we need some other trade partners where we can sell our commodities. Okay. Okay. So some foreign countries are telling their consumers not to buy US commodities, rather buy domestic goods. Okay. Good example is India urging Indians to buy Indian-made products. Okay. All right. Okay. Continuing on the economic inefficiencies. Okay. Okay. So this US policies are taking the trade policies back to the 1930s Smith-Hawley era. Okay. Such trade policies are generally causing a lot of inefficiencies. We call that welfare reducing. What it means is economically it's not good for the country. Okay. And tariff retaliation by foreign countries also not good for US exporters, particularly US farmers. Okay. And US farmers are hurt. Okay. So consequently, US government decided to subsidize US farmers. Okay. So they paid $12 billion in subsidies to row crops, particularly big commodities like corn, soybeans, wheat, rice, cotton, and also some specialty crops. But the thing is, the main point is, if you don't have this kind of trade barriers, you do not have to spend additional $12 billion, okay, taxpayers' money to farmers, right? Farmers would rather prefer to produce their commodity, to sell their commodity in the free market, whether in the US or foreign country, and not to worry about these trade barriers, thinking about where to sell their commodities. Okay, then eventually they are hurt because of their business losses. Now taxpayers have to foot another $12 billion. Okay, these are the things that we call economic inefficiencies. These are unnecessary spending that could have been avoided without these trade barriers. Okay. Okay, so moving on, tariff revenues. Okay, so this April, okay, that's when that liberation tariff came into play. Okay, before that, okay, the US was collecting tariff revenue about 7 billion per month. Okay, 7 to 8 billion per month, but because of this tariff policies starting in April, now they're collecting about $30 billion per month. Okay, so only 30 billion per month, $30 billion per month. Okay, it's not like a several $1 trillion. Okay, per year. Okay, that's way too exaggerated. Okay, it's only about $30 billion per month, and also this collection has been fairly stable in these last few months. Okay, okay, in spite of the jump in the early part of the tariff. Okay. Then let's look at the trade deficit. That's one of the things. Okay. One of the main reasons for the US government to put tariff is to reduce the trade deficit. Okay. US thought that many countries are exporting too much and we are not exporting to those countries much. Consequently, our trade deficit is very high with many countries, meaning that our exports are a lot less than our imports from, say, China. Okay, And putting this tariff would help to resolve this trade deficit. Okay? In the sense that when you put tariff on, say, Chinese goods, we are going to import less. Okay? But if you could get China to buy more, then we can export more. That will reduce the trade deficit with China. Okay? But in reality, that has not happened. Okay? The trade deficit did come down a little bit at the beginning, but if you look at the details, it has been fairly stable last few months with the high trade deficit. And this is a little bit more economics. Let me just give you a brief view. This trade deficit, what we call the current account and the capital account, some of those two deficits we call balance of payments, they are equal to zero. By construction, they sum to zero. So if you want to reduce the trade deficit, then move toward trade surplus in current account, the capital account will become deficit. What's capital account? Capital account is money going from US to other countries and money from other countries coming to US, particularly for investment in the stock market, investment in the economy. If capital account goes in deficit, that means many foreign countries are not investing in the US. That's not a good news. If we are not getting enough investment from foreign countries, either in the stock market or in US business investment, then when the investment goes down, that could lead to economic recession. So trying to reduce the trade deficit is not really going to solve a lot of problem. In fact, it could backfire because investment from foreign country could go down. For trade deficit to improve, not only we should import less, but also we should export more to the other countries. But exporting more to other countries is not happening. Our tariff is probably causing our import to go down some, but our exports not increasing tremendously to have a trade surplus.
Stephen, could I interrupt you, please?
Yes, please.
There's a very topical, timely question, which I think is going to be right up your alley as an economist. So this question says, Economics 101 starts with free trade benefits, benefiting both trading partners.
Yes.
This data set only showed US tariffs. Where's the tariff data from the trade going into these countries for the net trade barrier? And then this audience on processes into infinity, trade deficits to infinity do not work. Please comment on balance of trade principles missing to achieve free enterprise or free trade. Has not current U.S. policy been clear? Zero tariffs for access to export countries will be reciprocated to imports into the U.S. So quite a bit in there. Unpack it however you want. So do you have any thoughts?
Yeah. Well, free trade is where there are no tariffs. Free trade always the best policy. It's the best policy because goods move freely between countries without any impediments. When that happens, business are fairly stable. They think that trade is very reliable. They know where to export, where to import. So consequently, even under free trade, US may be importing more than exporting. We may have a trade deficit. The trade deficit is not a huge bad news. We have trade deficit because we are importing more. Why are we importing more? Because we have enough income to import more. So it's a good idea to export more, to increase the production and export more. But getting bogged down onto trade deficit, try to put tariffs to lower trade deficit is not a very productive policy. In summary, that's what I can say. But in the Q&A session, if the audience want to ask me specifically, I can answer more. All right. One of the reasons that US exports not increasing quite a bit is because US dollar increase related to many currencies. So many countries are feeling that US commodities are more expensive, and consequently they are not buying many US commodities. In contrast, when US dollar goes up, their currency goes down, then their currencies are cheaper, and it makes it easier for US to import foreign goods. So US is importing more foreign goods in spite of tariff because of the higher value of dollar. Okay. Okay. All right. So this is the trade deficit came before this Liberation Day tariff. If you look at that, this is a fairly high tariff trade deficit. Okay. It was in 130 to 140 billion range per month. Okay. But since that tariff, it has come down quite a bit. So the trade deficit did come down. Okay. But the thing is, since April, if you recall, it remains fairly stable. Okay, it's not keep falling steadily. Okay, then that's mainly because US still importing commodities from other countries because of high dollar value. Okay, and US is not exporting much. Okay, consequently, this trade deficit remained fairly 60 billion to 70 billion range. Okay. Okay. Just moving on to recent slides, I have about 3 or 4 more slides. Are we doing okay time-wise, or do you want me to speed it up? Okay. Okay. So a few weeks ago, the Supreme Court ruled in favor of striking down the US tariffs. Okay? Particularly the tariffs the US government placed on International Emergency Economic Power Act. Okay? And that's a large amount of tariff that US put. Okay? And okay, the US Supreme Court struck down that one. Okay? And because of that, okay, the US government, the US Court of International Trade also ruled that okay, US government should refund all the tariff that collected. That amounts to be about 130 billion to 170 billion dollar in tariff that US government collected. That needs to be refunded to US companies. Okay, that's where the issue comes. Whether you refund the US companies or you refund the US consumers. Okay, and some legislators are saying that if the money goes to US companies, it must go to the workers there, not to the company owners or who are owning the companies. Okay, so since the Supreme Court ruling, okay, the US government found another ways to put tariffs. So they imposed 10% tariff just within a day of this Supreme Court ruling. This 10% tariffs on almost most imports from most countries. This was imposed under this Section 122 of the Trade Act of 1974, okay, which allows the US president to put tariff because of the serious balance of payments problems. Okay. They decide to put 10%. They were talking about to put 15%, but they held on to 10% tariff instead of 15% tariff. Okay. However, the recent one more point, okay, because of the new tariff now, Canada and the European Union, they are trying to establish new trade agreements with China and India so that these countries can export to China and India, because those two countries are very large countries and they are a reliable source for exporting Canadian and European goods. Okay. Very recent developments are, okay, in addition to the 10% tariff, last few days, the US government is saying that they're trying to explore other possibilities of imposing tariffs. One is if some countries like China, India, they have some excess capacity in production, in manufacturing sectors, then that's another reason that US is trying to put tariff on those countries. And one other area is if these countries like China, India, or any other exporting countries, if they are using forced labor, okay, then US has the option of putting tariff on those countries under Section 307 of the Trade Act. Okay, so the US is currently looking into these two options to put additional tariff on these exporting countries. Okay, so to conclude, okay, US tariff policies are basically distorting the world trade system. Okay, that's not generally a good thing. Okay, and these distortions can impact the global trade. Okay? And also, US policies are done without any disregards, without any concerns to WTO policies. Okay? That's not good, okay? Because WTO is overseeing all these trade agreements, any disputes, and basically, if you are not listening to the court, you can do whatever you want to do. That kind of attitude, that's not really a good situation for world trade. Okay? And also, US policies can cause mistrust between countries. Can many trading partners they don't want to rely on US for exporting or importing because of the uncertainties created by these tariff policies. Okay, in particular, this unpredictability is very harmful to US farmers in their production and investment and sales decisions. Okay? And finally, the tariff increases prices US consumers. Okay? US consumers are already saddled with a very high price, particularly grocery prices. On top of that, you don't want to see higher prices because of the tariffs. Okay. All right. So with that, I will pass on these slides. Here are some of the studies that we looked at. This first study deals with vegetables. This also deals with vegetables. This one deals with many of the row crop exports. This general agricultural commodity trade. The overall economic impacts. This slide, this is the one I showed in my slide. So these are several studies. I will email the slides. If you want to, I have the links to these studies. If you like to go into these links and read them a bit more closely, you can. Okay. So with that, I will stop my presentation and take any Q&As.
All right, great. Thank you for that talk today, Stephen. We are coming up onto the top of the hour, just a few minutes, so we probably have time for maybe one or two more questions. There is one in the chat right now. The question is, Trump has famously focused on only the balance of trade in goods. What is the full picture when we include services?
Oh, yeah, that service, that's a good question. These policies are largely related to commodities, not services. However, Trump did threaten earlier on the IT sectors, for example, Apple producing its iPhones in India. Trump threatened you need to bring all this production to the US. If not, I'm going to put 50% tariff on iPhones produced and brought from India. I think that did not. They've tried to resolve that issue. The tariff did not take place. That's what my recollection is. But any tariff on that kind of iPhones, even though it's a commodity tariff, but does impact the service sector. Service sector. Eventually, suppose Apple's not going to produce iPhones in India, China, they have to produce there. Does affect the Apple companies, their businesses. They are not able to produce their iPhones cheaply if they bring back to India. So it indirectly affects the service sector, but tariffs not generally focus directly on services. Any questions?
Thank you. I have one question to kind of round us up. So is there any silver lining in everything going on? As an economist, what would you tell farmers? Can they divert production to something else? For example, could we grow our biofuels industry and have greater energy security? I guess what opportunities do economists see in this current timeline?
Okay. In terms of positive opportunities, probably not that much. But one thing we could recommend farmers is to diversify their production system. Not relying on particular crop, particularly if you are focused growing on only soybeans. That could be a problem. Maybe grow some corn, some soybeans. I know you cannot grow many different crops. It's like if you're in Midwest, you're largely growing corn or soybeans. But given that limit, it's better to do some diversification rather than focus on one particular crop. Okay.
Thank you. Let's again thank our speaker today, and I thank you all for your participation and engagement in this webinar. We want to give a special thanks again to Dr. Devadoss for his insights into agriculture and U.S. trade policies, and I also want to thank the ASABE team for their support in making this member hour possible. If you have an idea for a topic or speaker you would like to see in a future session, please reach out to any member of the CBSI leadership team. And we are excited to continue this series next month. So keep an eye out on your email for registration details for our next session. And just for some final additional resources and stay connected with us, we'll add some links to these in the chat. But all sessions of this series will be available on YouTube. Access those videos by the ASABE website, or you can search for ASABE's YouTube channel. You can join us. You can mark your calendars for the 2026 ASABE Annual International Meeting in July. We will be in Indianapolis, Indiana with more CBSI related discussions. And follow us by joining the Circular Bioeconomy Systems Institute group on LinkedIn to stay up to date on all of our latest activities. And with that, I want to thank you again for sharing your time with us today. We want to thank our speaker, and we look forward to seeing you all again next month.
Okay. Again, thank you very much. Thank you for the opportunity to present my research.
Absolutely.
Thank you,
Thank
Steve.
you.
Thanks, everybody.
Okay. Okay. Bye. Okay.